Hello, this is John Kogan, and welcome to today's event entitled Best Practices for Evaluating and Selecting Accounting Software in Today's World. Brought to you by Performative, the online community for corporate finance, accounting, treasury, and related professionals, and sponsored by our friends at Intact. We have a wonderful program for you today. The webinar that we'll be presenting today will feature accounting software experts Taylor MacDonald and Marcus Wagner. I will introduce them at length in just a moment, but they both have significant background in the space of software evaluation and selection, and they're here today to give us some best practices in those areas, which we're greatly looking forward to. A quick note on today's process, how things will roll out here. We will spend the first 40 minutes or so on a presentation which will be shared by both of our speakers today. So there'll be presentation and then back and forth with both of the speakers. Then we will have a Q&A session, and that will last about 10 minutes or so, and 10 to 15 minutes depending on the time we have available. And then we have a few polling questions in between. We will finish promptly at the top of the next hour. So we've got a lot to get into the next 60 minutes, and why don't we go ahead and get running. First, a quick welcome to Performative to those who are new to Performative. Performative is the largest and fastest growing online resource for corporate finance, treasury, accounting, and related professionals. It's a great peer-based resource, so when you come onto Performative, it's peers asking questions of other peers, and the other peers answering. It's a wonderful thing. It's all ad-free, completely noise-free. It's just a great thing. Check it out if you have not at www.performative.com. We have a few notes on today's event. First off, links to today's presentation and the recording of this webinar will be sent out to all attendees within 24 hours of this event. The presentation itself is already loaded at performative.com/resources. So if you would like to go ahead and download the presentation right now, follow along, make notes as we go, etc., you can do that. It's already available. Performative.com/resources, free, of course. We are offering CPE credits today, and there will be 3 polling questions throughout today's presentation. One towards the front, one that's about 2/3 of the way in, and another at the very, very end. Hopefully you pre-registered if you want a CPE credit. If you have not, if you forgot to do that during the registration process, please contact Chris Brower. You can see her email address right there on the screen, cbrower@performative.com. We would like this to be an interactive session today. We love it when folks ask questions. We have an entire Q&A section that's the last 10 to 15 minutes of the presentation. We've got 2 experts who are deeply steeped in today's content and subject matter, so this is a great opportunity to ask questions, get some very high-quality advice for free. If you'll take a quick glance at your GoToWebinar control panel, you'll see there's a little section there entitled Questions, and there's a box, fill in a question. We do not announce your name when we ask your question, so you don't have to worry about what will other people think. Just feel free to ask questions, and we love getting those on the table and allowing the speakers to discuss them. Finally, after today's event, you will be asked to take a short survey. We'd love to get your feedback. We always want to do better the next time. As well as we try to do every one of these, we can always do better. So your feedback is greatly appreciated. It is literally 60 seconds. And in that survey, we make it very easy for you to request connection with today's speakers. So if you would like to be connected to either of today's speakers, you don't have to send us an email with that request. Just take that 60-second survey. It's a mouse click away. We're happy to connect you to either speaker or to today's sponsor, Intact. So that's all right there in that post-event survey. We have a number of learning objectives today, and I'm not going to go through these one by one, but we want to cover all of these areas. I believe we've got enough time to get to each one of these, and we'll be talking through the slides and pulling in practical experience from today's 2 speakers as we go, so that frankly you'll be much farther ahead than you are right now in terms of the selection process around accounting software. So we hope to provide you a lot of value in the next 55 minutes here. And why don't we go ahead and jump straight in. Without further ado, allow me to introduce today's two speakers. First up is Taylor MacDonald. Taylor is VP of Channels at Intact. Taylor is responsible for managing the Intact value-added reseller and CPA channel initiatives. Taylor has more than 20 years experience building and operating some of the most successful programs in the world of financial and ERP providers. Taylor has been on the Accounting Today list of the top 100 most influential people in accounting 6 times. He holds a Bachelor of Science degree from Yale University, and he also serves on the Board of Directors for the Information Technology Alliance. Now, in addition to Taylor, we have joining us today Marcus Wagner, who's the CEO of Act 2. Marcus has over 18 years working with large, medium, and small companies in the areas of financial accounting and auditing, process and internal controls consulting, and management advisory services. His career began at PricewaterhouseCoopers, where he spent time in the financial audit and risk advisory practice areas. Marcus is currently CEO of Act 2, a business process outsourcing firm for middle market companies. Marcus holds a BA from Rice University, and he is a certified public accountant in the state of Texas. Taylor and Marcus, thanks so much for joining us today, and please take it away.
Thanks, John. We're both thrilled to be here. This is Taylor MacDonald with Intact, and let's just jump right into it. So our agenda today is to discuss whether you're ready to replace your financial application, and if so, how do I go about it? There's getting started, defining requirements, going through the evaluation process and the like, and I'll be, along with Marcus, taking you through this agenda today. So we look forward to jumping right in. So some typical reasons that people change, obviously, are, there we go. They struggle with reporting, with analyzing data, too many manual processes, spreadsheets, and the like. Sometimes it's a scalability issue of not being able to have enough users. But Marcus, what have you seen lately in your practice as to why people come to you and say, hey, you know what, I've got pain and I'm ready to change to something else?
Well, Taylor, I definitely see all these items here that we see on this slide. There are many reasons why people decide they've outgrown their accounting system or they want to replace it. I kind of see these as the more reactive side of the equation. In other words, we have a problem now, we need to solve it. But I also see companies that are a little bit more forward-thinking and realizing that they're going to be experiencing some high growth, or they are planning to scale their companies in the future, and that what they have may work today, but is not going to work as they begin to add new locations, new headcount, and hopefully grow the company. And also I see CFOs and other senior management who really want to transform their business through better management information and business insights that they're just not getting from their current accounting solution.
Great feedback. So some top issues that we see from CFOs is some of our partners survey these folks are a couple of things. Managing the budget, providing information to the leadership team, making sure that we're going to improve some operational business processes, and then obviously on the monthly cycle, which all of us in the accounting world have come to know and love, things that aren't automated, which was number one there, systems not being integrated. Those two typically account for the majority of issues. But a third one sneaking up on us, which is many people have downsized in today's economy, and there simply aren't enough people to get the work done as quickly as we can. So John, how about our first polling question?
Thank you very much. So I'm going to go ahead and launch the first of our 3 polling questions right now. And you'll see that up in your screen in just a moment. There we go. How extensively does your accounting department use spreadsheets in their day-to-day operations? So this is a quick and easy one. These are statistical questions, you'll note. We do love to have everyone participate in these. If you're here for CPE credit, you must participate. But even if you're not, we love to statistically just see what's going on. And actually, if we have time at the end of today's presentation during the Q&A, we'll go ahead and turn these results around so that people can see what's going on with their peers. I'll go ahead and leave this out for another 5 seconds, and then we'll hand it right back. Okay, thanks everyone for giving us your 10 seconds there. And back to you, Taylor and Marcus.
Great. So Let's see if we go right back to where we were. Okay, so one of the things is people start to think about this. What we always say is, hey, the first thing you should do is to gather people around you, get an executive sponsor to make sure that you're going to do this right, find the people that are really involved with the software today and other stakeholders, then set clear goals, and obviously create a project schedule. But Marcus, there's so much more to it than that. That's just the basics. What else do you recommend?
Well, you know, we're frequently contacted by companies that are looking to potentially change their accounting software. We've got a great partnership with firms like Intact, where we're a reseller, and we seem to be getting contacted a little bit late in the cycle, where you know, it is sort of crisis mode, and a lot of times we have folks contacting us who say we want to be live with a new system within the next couple of months. And generally, there's just not enough time to get all of these things done. So getting started early is really the key. I think just to give you some numbers here, or a time frame, a good selection process probably should take around 30 to 60 days, and that's probably being conservative if you're going to do it right and you get all the right people involved. And then after that, an implementation is probably going to take another 60 to 90 days. So you're looking at 3 to 5 months out from any desired go-live date of a new accounting system. So my biggest advice on this slide is just get started early.
Great. So the first and most important thing in our mind is that you have to define the requirements of what the system requirements are, what you hope to achieve with it, obviously what the pain is. Imagine how you're going to sell this to the powers that be with return on investment or total cost of ownership. In some cases, obviously, using a outside third-party expert will help. To me, the most important thing that we ever did was to get the stakeholders in the room, buy them lunch, and start to talk about the things that the system didn't do, and to quantify the problems that we're going to be able to, a new system would be able to solve. That way, all of a sudden, by asking people, hey, what do you hate about your job? Where do we rekey data in multiple times? Where are we not integrating a system correctly with another? Where are we using spreadsheets? Asking those kinds of questions seems to bring out lots and lots of feedback from the people that are involved. Marcus, other things that you would add there?
Well, I totally agree with you, Taylor, that you know, you should be asking those types of questions throughout the organization. Don't try and document the requirements in a vacuum, because your peers and even outside experts are going to be a great source of this information. And you may hear things from folks outside of your department and other parts of the organization that you didn't even know were pain points. Some other things I would say is I like to start with where is the real value potentially going to come from a new system, and typically that's in management reports, key performance indicators, where the accounting system can truly, you know, transform the business through better insights and information, and then work backwards from there. What are the key business process requirements, areas where there's a lot of manual effort or non-integrated systems? And then the third thing that I see often is waiting until the last minute to understand return on investment and total cost of ownership. And the reason why I see that is because that's when you kind of make your recommendation to management or the board, and then there's a bit of a scramble to try to say, how do we articulate this in terms of a business case? So getting started early on return on investment calculation and also the total cost of ownership is very key.
That's great feedback. So some things that we think every CFO should think about is, obviously, number one is boosting productivity, getting rid of Excel or spending less time on it, allowing a company to grow with fewer accounting staff. As Marcus said, the transactional engines are very good in almost every accounting package, and so what we're really trying to do is to provide better information more quickly so that people can make better decisions and allow people to focus on the core business. And then, of course, most importantly, to be in a position to scale for growth. We have a current customer who just moved from QuickBooks to Intact that's at 700 employees, and they expect to hire another 700 employees this year. Well, if you're going to double your business and double your number of employees, your systems better be in a place where you can scale them so that they can help that. So some other things that you might consider are on the screen: IT resources, who's going to make the decision, other systems that you need to integrate. What else comes to mind in this, Marcus, in this area when you work with people where you're trying to guide them through this process that they sometimes fail to consider?
Well, I think one thing to understand is that in today's world with on-demand software as a service type products, you have a very different deployment model, and so you may need fewer IT resources. You also have the ability to reach much further out into the organization because it's so much easier to give people access to an accounting system. So when you start thinking about where are my users potentially located, a lot of companies, if they're coming from a product like QuickBooks, they've got a handful of users in the accounting department that are using that product. But if they move to a system like Intact where you can decentralize some of the processes like time and expense capture and actually push some of that workload out to other parts of the organization, that's a great way to avoid having to add headcount back in the accounting department as those companies grow. And then also think about the true benefits of end-to-end processes as you integrate with systems like the ones that are mentioned at the bottom of the slide, CRM and professional services automation.
So once you've defined the requirements, you've talked about what's needed, you've quantified the pain, you started to build a return on investment, one of the things that's important is to begin to understand the options. So that's a functional requirements. What do we need the product to do? We need to understand the different software delivery models, and then we certainly need to understand the difference between best-in-class and suite. So one of the things that's important is to understand how deep financial applications have become. So they range from the accounting line there of general ledger, bank rec, project accounting, fund accounting, to finance. Could be treasury management, cash management, consolidation, fixed asset management, to payables and receivable that we all know, but tax management's becoming more and more important. Collection management also becoming incredibly important, to inventory and order management, and then to things like employee management, expense tracking, payroll integration, and then, of course, the many different types of reporting that we might have, financial reporting, obviously ad hoc reporting, dashboards, and all the issues that we might have in a multi-company, multi-currency environment. So there's a tremendous amount to think about. This is where working with a very valuable third party can be helpful, as well as to go out and network with your peers, because they may bring to your attention something that you'd never thought about. So one of the things that's important is to make sure that whether you need them today or at a later point, that the system that you pick can continue to grow with your needs. So one is a multi-ledger system, so that accounts payable transactions stay in accounts payable and accounts receivable transactions stay in accounts receivable and the like, that it's a multi-currency system in today's global world. Whether you need it now or later, the likelihood is that you very well may need it later. Things like multi-entity. Intact has over 6,000 customers, but they run 35,000 different entities, so that's almost 6 plus entities per customer. So being able to have a single version of the financial truth across all entities becomes very important. And then multidimensional, so that you can post transactions by dimension, whether that's customer or vendor, project, employee, or the like, and be able to report on those data in whatever way you feel like. So today, software delivery comes in 3 different flavors. The way we done it for most of our time, on premises, where we install something on a server or put it in a closet and make it available to people on our network. Hosted, where we go and take that same application and put it on somebody else's servers in a hosting provider, or as a true multi-tenant cloud solution that we think of when we use things like Facebook or LinkedIn, or going to Amazon, where I simply go open my browser and go to intact.com, for instance, and just log in. Marcus, thoughts about all three? You certainly see all three as in people coming to you and looking for your advice.
Certainly, there are different levels of understanding and maturity out there in terms of what these mean. I think there's a lot of confusion around the difference between hosted and cloud. A lot of people think those are the same thing. Others I talk to, don't understand the costs associated with the on-premises or hosted solutions, and so they're just looking at what does it cost me to buy the licenses? And once I bought them, then I own it, and I don't have any further costs going forward. So there's a big educational process here that needs to take place if you're going to evaluate accounting solutions that fall in these different categories. And I think we're going to talk more about that on some future slides.
So one of the other important ramifications of buying a new package is the best-in-class world versus the suite. Suites are very comforting, the thought that you're going to get everything you need from one provider. They typically come into play as you change technology. So as we've made the move from on-premises to hosted, the suite sort of becomes one of the ways that people think about these solutions. But then the other way is obviously the best in class, where you take the best pieces and make them work together, which is very easy in the cloud, so that you never outgrow any one particular piece. It's certainly our belief that somebody who writes manufacturing software that has thousands of customers on a manufacturing solution is a better person to partner with to create a best-in-class solution than it is to have a company want to go write a manufacturing solution. So we'll talk again a little bit more about that. So Aaron, Marcus, why don't you take us through this slide and what you've seen as it relates to best-in-class versus suite in some of these different areas. You don't have to cover them all, but what have you seen as you've worked, again, with medium to large companies?
Well, I'll just give you a real-life example of this that really drove home the difference for me. We had a prospective client that was evaluating accounting software, and they were looking at 3 different ERP applications. Intact was one of them, and 2 competitors. The 2 competitors were both what we would call a suite solution, whereas Intact tends to take more of a best-in-class. And what they were dealing with 3 different stakeholder groups: finance, they had a professional services team, and then they had the sales group. And there was one of the suites, the sales team said, we can't work with the native CRM that's in that ERP suite product. The other suite product that they were looking at, the professional services team said, absolutely not going to work for us. The PSA functionality doesn't work. They ended up going with Intact because it worked great for the finance and accounting group. They went with Salesforce.com for the sales team, and they went with another professional services product for the PSA team. So everybody's happy at the end of the day, and nobody had to make any compromises.
And the product worked seamlessly together because it was designed from the ground up to do multi-system integration in the cloud. So that's an even better example than, again, what's up on the screen. So once you've done all these things, you start to get into the evaluation process. Obviously, you want to go online and make sure that the vendors are reputable, perhaps create an RFP or an RFI, request for proposal, demo or trial from a very short list of people that you've spoken with, calculate the return on investment, total cost of ownership, and then obviously check references. One of the things that we find in the evaluation process today is that buyers, because of the internet, are much more capable. They're much further along. They're not starting from scratch. Many times they've seen demos or product tours of our product or others, so that they come into the sales cycle not at the beginning but almost midway. Marcus, thoughts about working with people as they go through this evaluation process?
Well, I've seen some companies use external consultants and or have a request for proposal and a more formal process, and others more informal. I would say if you're going to use external consultants and or formalize a request for proposal process, make sure that you're using it to add to your process, that it's actually going to add value, and try not to make it overly bureaucratic. A lot of times the third-party consultants may feel like they need to be a buffer or a barrier between and the customer, you really need to make sure that the vendors are given the chance to articulate their value proposition, interact with the key stakeholders. And what I've seen a few times happen is the third-party consultant kind of writes up the final report, having gone through the entire evaluation process, and that's the first time that the CFO or whoever the key decision maker is actually getting any information. And so they've really missed out on some key opportunities to interact with that software vendor and maybe some of their integration partners, because a lot of this is about the relationship that's going to take place and not just the technology.
And I couldn't agree with you there more. We recently had a request for proposal that had over 1,000 questions, and of course they sent it out to a group of 22 people to comment on, and they were surprised when they only had 6 people respond, none of whom were the people that they wanted to respond. And the reason why was very simple. It was way too much work to do, and they hadn't taken out of those 1,000 features and said, which of these are the most important ones? Which of these are the ones that are going to transform our business? Which of these are the ones that actually matter versus can you do a journal entry? Can you write a check? Those are givens in today's time. So make sure that you focus on the gotta-haves and not the wouldn't it be nice, or gosh, can this take us to the moon, or the like. So a quick review of online sentiment. You can go find things like this on the internet. I think it's a good overview of what customers and recommenders think of a particular product. We're certainly proud of the continuing positive sentiment and high renewal rates that Intact enjoys. So let's talk about what's different in the cloud. So first is there is more to evaluate, because in many cases we're in a world that people have not gone down before, a road we've not gone down. So we've got to worry about the product fit and make sure that we get it implemented correctly. But then if we're going to look at a cloud solution, we've got to make sure that that the uptime is there, that the infrastructure and security is there, that whoever we're dealing with is not going to go out of business, and again, go create a return on investment and total cost of ownership evaluation. So very important, and again, very different than perhaps what many people have gone through. So, Marcus, you've been through this a number of times. Thoughts on how to evaluate publishers and vendors in terms of the security, the infrastructure, and how they offer their solution?
Well, I think I frequently see some fear and uncertainty when you're talking about public cloud providers on the part of potential buyers, and I think part of it is that they feel like if it's in the cloud, I can't touch it, I don't know what's behind it, I don't really know what I'm getting. And what I found is that cloud providers like Intact and others are the good ones are very transparent in how they operate their software, what type of security measures they're taking, what type of backup and recovery measures they have in place, and of course some of these third-party audit and certifications, like the old SAS 70 Type 2, which is now called SSAE 16. Those are things that your external auditors, if you're a CFO or controller, they love to be able to get their hands on that. And so don't be afraid to ask your vendor or prospective provider of an ERP solution, what do you have, and what guarantees can you give me, and what reports and certifications am I going to get?
And Marcus, great points, and one of the things that you should clearly be able to ascertain is that with a cloud vendor that you're in fact much further along than you would be if you tried to do this yourself. Better uptime, better disaster recovery. We just had another tragic major storm, Nemo. We saw it with Superstorm Sandy, where people either couldn't get to work, couldn't run their businesses, or in some cases because they didn't have adequate backups, they simply were out of business. People took servers home in their cars, and the cars washed away, or the server was ruined in the rain. We saw it in Nashville, we saw it in Joplin, and those natural disasters simply won't go away. So one of the things to understand is that the cloud actually offers you more redundancy, better disaster recovery, better security, and of course better uptime as well. So one thing that we pride ourselves on is service level transparency. So you can simply go to intech.com/status, and you can see our uptime. You can see from all over the world how our system is trending in terms of responsiveness. You can see not only on a monthly basis but also on an annual basis what our uptime has been. And of course, you want to certainly be at 99.99% or better. So let's talk about something that, again, lots of people haven't done in a long time, Marcus, because in the past we changed systems because, quite frankly, we outgrew them, and so we didn't have to worry about a return on investment. We just knew that our existing system couldn't keep up with what we wanted to do. But today, as people stretch the use of systems and choose to go through this process less frequently, one of the skills that's been lost is the ability to go create a return on investment. So two or three different high-level areas there: business visibility, revenue gains, cost savings. Cost saving is the one that everybody's familiar with because, you know, when people say the revenue's not there, we say, well, let's cut expenses so that we can go and make sure that we're still profitable. But talk about business visibility and ROI that can come from that, as well as revenue gains that can come from having a more capable financial system.
Well, I think that, you know, the left-hand side of the page here, the business visibility area, that's the difficult to quantify value. But I think that you're better served if you take the time to try and quantify it and understand how better information, more timely information, can truly transform your business. And look, we live in a new normal today. You know, we're still clawing our way out of the Great Recession, and what businesses all over the country have realized is it's a new normal. And in order to be able to survive today, companies have to adapt their business models quickly and decisively. And the only way that you're able to do that is by getting the information that you need and getting it now, and being able to make fast decisions. So depends on the industry you're in terms of where those value propositions are, but you really need to be talking to the C-suite of your company. And this is where things, you know, tend to get lost if the CFO delegates the selection process for the new accounting system to you know, the accounting manager or their receptionist or whoever it may be, because they're not going to necessarily know, okay, what could be transformational for our business here.
Right.
As far as revenue gains go ahead, Taylor.
No, I was going to say, adding on business visibility, things just like knowing which customers ordered $5,000 from you last quarter but haven't placed an order this month, or who are we selling to that is continuing to pay us more slowly. Simple things like that that provide us greater data to make more timely decisions. So,
absolutely. Yeah, and I was just going to add a couple more things on this slide. I mean, the revenue gains concept, I mean, there are a lot of things that you can do that are really simple things that can help your business, like setting your system up to do recurring billing. If you've got any kind of a subscription-based model or just recurring billing, so that the accounting department doesn't have to remember to do those things. Electronic invoicing, you know, how many businesses today still print and mail invoices, and then we're relying on the U.S. Postal Service to get that into our customers' hands. Modern accounting systems today can send those out electronically. And then if you're in a renewals-based business, automating those renewals so that, you know, that revenue is just automatic. If you're doing a great job for that customer, then you're going to get the renewals. The cost savings piece to me is the easy part. I mean, that's where you're getting the accounting system to automate some remedial type functions, get rid of the spreadsheets, and avoid having to add headcount.
Yeah, getting more productivity per employee. The customer I mentioned earlier that had 600 or 700 employees and was going to basically double in size was producing 1,000 invoices a month in QuickBooks. It took better than a day and a half. They then folded them, put them in envelopes, put them in the mail, and so it was literally 7 or 8 days before those invoices got into the customer's hands to begin the payment cycle. Today, on the first of the month, they push a button, 1,000 invoices go out, they're sent electronically, they're able to be paid electronically, and their cash flow has increased dramatically because of that. So just a simple example along the lines of what you mentioned. So one of the things that we would encourage you to do is, and again, what I like to do is, having been in a business like Marcus's, is grab a bunch of people, maybe by different role, depending on the size of the organization. Maybe it's everybody at once, and using this layout as a map, simply say to the team, so do we ever not bill everybody? Do we sometimes not bill people on time? Do we sometimes not get our months closed in time and the like? How can we speed up collections? How can we speed up invoicing and the like? And sit with the team and identify these, whether they're visibility benefits, revenue gains, or cost savings, so that you can then go use those as the basis of a return on investment calculation. So here's some typical things to consider. You can see the drivers there. It might be something like faster closing the books. I've got one customer I'm very close to that used an on-premise solution, and they closed their books between 12 and 15 days after the month. They now, with Intact, close their books on the second day of the month. So that automated process leads to greater productivity improvement, greater knowledge of how the business is doing on a more frequent basis. But thoughts on any of these, Marcus?
Well,
or ones that you particularly try to highlight for your customers?
Yeah, absolutely. I mean, the faster closing of the books is a really big deal, because the longer it takes you to close the books, the longer it's taking you to get the information into the hands of the folks that need it to make decisions about the business. And so that's a big deal. I think that, you know, a lot of these are really hard to put dollars to, or most companies find it difficult to actually quantify the benefits, but I think it's worth making that effort, because you'd be surprised what you can find and the value that you may be able to generate for your business.
Yeah, whether it's making sure that things get billed, whether they get collected more quickly, whether we realize that we've made mistakes, whether we're have more free time for our accounting staff so that they can be working on more meaningful things and the like. It is possible to create a very strong return on investment. So one of the things that's important also is to understand is the total cost of ownership that you have with the different models. So one of the things that's important to understand is on the cloud, almost all the costs are above the waterline, if you will. And on-premise, the software license is just a very small piece of the ongoing price of running an on-premise solution. We actually did some brainstorming one day, and we found out that there were 22 different costs to running an on-premise solution. We started with an interesting brainstorming exercise to figure out how many different costs of running a car there were, and without getting into the minutia, we came up with over 18 different costs involved with running a car. And what you would think about, well, there's a cost of the car, and there's insurance, and there's gas, but in fact, like running a system, there's literally dozens more costs involved with running a system. So thoughts here, Marcus?
Yeah, you know, we do this calculation all the time, typically as part of our process of advising prospective customers on their accounting solution. We'll try and evaluate the total cost of ownership of an on-premise solution versus something like an Intact product. And it surprises me how often even the CFO will say, you know, I can buy a Great Plains on-premise for $20,000, $30,000, and once I bought it, I own it, and I have no more costs. And what we found after doing a number of these calculations is that if you use the cost of the perpetual license purchases as a benchmark to figure out what your true total cost of ownership is, it can be anywhere from 6 to 12 times that amount over a 5-year period, and the average is about 9 times the cost of the initial licenses. And you know, if you think about that, you know, one of the other components other than the perpetual licenses, you've got to pay typically 20% annual maintenance. And so over 5 years, you're going to be doubling the cost of that, you know, initial perpetual license purchase. And then you add in all the other factors, buying servers, buying database software licenses, and on and on and on. What we found is, on average, you're talking about 9 times the cost over a 5-year period.
So one of the things that I know is hard is to have that discussion and to make people realize that those are real costs. We know that there's some IT guy costs, whoever your IT person costs to running an on-premise solution. And the common response I get, well, is, hey, you know what, Rob may be spending 10% of his time helping to run this on-premises accounting solution, but we're not going to get rid of Rob. How do you counter that, Marcus, even though that's a real cost?
Well, in some businesses that is hard to counter, but you know, a lot of times people find ways to fill their day and make themselves useful. And is that 20% of Rob's time that he's spending really being spent on the right things? I mean, right. If that hurricane comes through your office or somebody steals your server, are you really going to be able to recover from backups? You know.
So in other words, Rob could be working on things that were more meaningful and more valuable that he doesn't have time to do because he's worried about keeping the system up.
Exactly.
Yeah. So critical part to understand and to come to grips with this whole total cost of ownership piece, because again, it is something that a lot of people haven't gone through. They haven't thought about all the costs that are part of a on-premise solution. So we've gone through how to get started on this, how to define the requirements, understanding the options through the evaluation process, and then obviously you've got to go and calculate the return on investment and the economic return so that you can go make a case to the powers that be that this is in fact a good decision. So Marcus, some thoughts before we get into the Q&A and more polling questions. What advice, you know, if your best friend came to you and said, hey Marcus, you know, I got a small business, medium-sized business, and we've really outgrown product X, Y, and Z, but I'm struggling with how to get started, or I'm looking for some high-level advice, what would you tell that person?
Well, there are a lot of resources out there today. You know, all you have to do is get on Google, and obviously the world is at your fingertips. And whether you want to engage a third-party professional who's more of an independent and objective type firm or individual, or reach out to a vendor, even the good software vendors will, obviously they're going to be wanting to sell you their product, but if you make them prove their value proposition, ask them the questions, the answers that they give you will inform you about things that you may not have even thought about. A lot of times I see folks who embark on this process, a typical CFO may do this 2 or 3 times in their career. And so if you're basing how you go about this today on the technology that was available, you know, 15 years ago, the last time that you implemented accounting software, you're probably not going to be making the best decisions. So find out what's out there, reach out for help, and make sure that you start early, like we talked about before, so that you can go through this process and really be diligent, because it's a very, very important decision for your business.
And obviously not being up against some arbitrary deadline of we've got to go live by January 1st, and we're going to cram everything into making decisions and not have enough time to do it correctly. So one of the areas that I often get asked about that I'd love to get your opinion is, so we've identified our needs. We've talked about the things that we have to have. We've identified 2 or 3, whether they're vendors, whether they're partners like yourself, but 2 or 3 people who are going to demonstrate the system to us. How is the best way to go through that process so that you can actually walk out of the other side of that demonstration or multiple demonstrations and feel good that the product is in fact going to meet your needs?
Well, I would say don't start with a demo. I talk to so many folks who say we want to evaluate a new accounting system. You know, can you come out next Thursday and demo your product? Well, these products, as we've talked about on some of the previous slides, the ERP systems today are so robust and so broad in the functionality that they can bring to the table. How is the vendor really going to come out and know exactly what to demonstrate? There may be 10–20% of the functionality of any particular product that's really key and is going to resonate and help a buyer make a potential decision. So instead of starting with a demo, make sure the vendor understands your business, understands where your pain points are, understands where the ROI is, the value that can be unlocked by changing to a new accounting system. And if you haven't done that homework before you engage with the vendor, then you know you need to go down that path together with the vendor. And if the vendor is not interested in doing that, or they don't seem to be good at that, they may not necessarily be the right fit for your organization.
So in other words, the discovery portion of the process where you as a business owner share those things with whoever you're dealing with, vendor or partner, are absolutely critical. The second piece is obviously to make sure that you see what's needed. I like to suggest that you do a conference room pilot, that you take the 2 or 3 or 4 things that are most critical to your business and give, again, vendor, partner, real data, real life examples where you can see what their system can do and actually produce a source document that's equivalent to what you might be doing by hand or what you would like the system to be doing. I've also seen, Marcus, and I think it's generally a good idea if it's done correctly for all players and done with instruction, is I've actually seen the participants in those demos have score sheets, and as they go through business cases, they are scoring based on a predetermined scale with comments, what they liked, what they didn't like, what they saw, so that then they can go compare not just, hey, I really like those folks from vendor X, it's, boy, they seem to really understand our business and they were able to solve that tough business case that we had. Thoughts on all that?
Yeah, you know, one thing we're doing with one of our clients right now is they're wanting to make sure that the system is going to work very, very well for them. They've got a complex set of requirements. They're pretty sure they want to use Intact, but the deal we have with them is they said, look, we really want to test every piece of functionality and really see it work. And obviously, in order to do that, we at Act 2 are going to have to do a lot of work to really essentially customize the system before they make the decision to buy it. And so we're doing a series of paid proof of concepts for them where they've said, here's the use case, this is what we want to see it do. Some of them are complex, like interfaces with existing systems, and then they're paying us to go ahead and do those now with the understanding that obviously that's all work that we would have had to do as part of the implementation, and so they're going to be credited for all that effort once they've made their decision and we actually move forward with the implementation. So there's different ways to crack this nut depending on your culture, your budget, and the vendors that or the partners that you're working with.
So John, do we have a bunch of questions that we can, and polling questions that we can do?
We do, actually, and thanks for folks who are asking questions, and I encourage you to keep asking, although we are going to launch our second polling question here.
Great.
Quickly, so let's go ahead and get to that, and I'll launch that right now. And then as a reminder, we will have a third polling question coming up at the very end. So this one, just briefly, what are your thoughts about cloud computing and software as a service? And we've got 3 choices there. We'll go ahead and leave this out for about 40 seconds. So a quick reminder, once you're done answering this polling question, please do go ahead and add to the pile of questions here. Anything that we don't get answered right now, we'll work with our wonderful speakers to make sure we get answers out, hopefully on Performative and certainly directly to the people who asked them. So if we don't have time to go through all of them in the Q&A period, you'll get an answer to your question. So we will work together to get you that. Also, a quick reminder that we do have a post-event survey, so we would ask you after the third polling question to stay on for just 1 minute and help us out by answering that post-event survey. Okay, I'm going to go ahead and close down this polling question in another 5 seconds, so if you haven't finished answering, go ahead and do that. And now we're going to go ahead and jump into Q&A. All right. So first question, there's a funny comment here which rings true. The big problem with the IT guy is getting mind share. The IT guy will get to your problem on his schedule, not yours. And that came in as you guys were talking to internal support for on-premise systems, et cetera. Now, in my experience at smaller and mid-sized companies, I've been a CFO a few times, is that happily the IT guy reports to you, but the IT guy might be busy with 20 other things, and frankly, that person, guy or gal, might get in the way of your choosing something that might not be, in their complete control, et cetera. So, Marcus, a quick question to you here. What are you finding in terms of support from IT professionals with the whole idea of cloud? Are they worried because they give up control? Are they relieved because it reduces their risk? Where is IT kind of sitting with this whole cloud thing right now? And we'll start there.
Well, I think it's a great question because it is frankly an issue. Public cloud computing solutions really change what an organization needs from IT and from their IT organization. And yes, certainly there's a lot of fear, uncertainty, and doubt created by some of the IT folks because they realize that, look, if my company goes with something like Intact or Salesforce.com or something like that, they don't need me because that application is supported by the vendor. And I think what IT folks need to be doing and what organizations need to be doing is increasing the emphasis on different skill sets. Web development is a huge skill set that IT professionals need to start bringing to the table because now that everything's moving to the cloud, everything can integrate through open web APIs. And if the IT organization has the ability to, write those types of code, do some PHP script development, and some of the other leading languages that are out there, that's great. If all they want to do is run and maintain the server and manage some backups, apply some patches, those types of activities are becoming less and less value added for companies today.
And Taylor, in the same vein, are you seeing how critical a player is IT in the implementation phase of a cloud-based system? Are they not doing anything, or are they kind of sitting in the background? It seems like the finance and accounting people actually do a lot more of the driving of the customization of these platforms and preparing them for use.
Well, it's interesting you asked that, John, because I'm on site today in Philadelphia with one of our partners, and one of the things that they said was that what they love about Intact is that there's no technology component to it. They say we're accountants. We like to help small businesses improve their businesses, make more money, run their business better, and we don't have to worry about their hardware infrastructure. We don't have to worry about installing the software and then telling them that they need to upgrade to from Windows ME to Windows 8, which means buying new machines, or that they need new drivers or whatever. You might imagine. So IT can be involved in making sure that the environment is that you have a workstation or a computer that works and that has a browser on it. But after that, they're pretty much on the sideline. And what we find is that one, IT guys are A, very busy. B, they're probably focused, as Marcus has said, more on keeping the lights on than on being strategic. And by deploying something in the cloud where you don't have to worry about backups, you don't have to worry about disaster recovery, you don't have to worry about uptime or the like, those IT people can then be more strategically deployed.
Mm-hmm. So speaking of end-user customization, and when I think of cloud apps, I think, okay, my financial analyst or my accounting manager, they're actually going in, there's always some basic reports, but then they're going to write their own, and that's a nice thing to do because you put the control in their hands. But what about, Marcus, your answer to questions about customization? How do we think about customization when it comes to cloud? When it was on-premise, and I used to be in finance at Cisco and some other big companies, we had literally hundreds of DBAs, and they'd write custom reports and do all of that fun stuff or make custom connections from system to system. Today, a lot of folks are interested in vanilla. How out of the box can we be? Doesn't that streamline things? Doesn't that give us best practices from the get-go, et cetera? What are you seeing amongst your client base in terms of vanilla versus customization and how they manage that?
Well, I definitely see sometimes a misconception that if you're online, if you're offering some kind of online application, that it is only vanilla and that you don't have the same ability to customize it as you would an on-prem solution, and that's just simply not true. Products like Salesforce, Intact, they have huge amounts of customization that's available. They provide their own platforms on which you can develop, your own applications to run alongside their core functionality. We've got one customer that we're implementing Intact for right now, and they've got $300,000 spent on customizing their Salesforce application because it's really core to their business, and what they've done in that area is really amazing. And so with Intact, I really believe we've got the best of both worlds. We've got quick start financials. We can get customers up and running very fast. They say, look, a general ledger is a general ledger. I'm a service organization. Give me a basic chart of accounts, and I need AR and AP, and I can move on down the road. And we can get those companies up and running quickly for very little implementation costs. On the other hand, we have the ability to do some very, very cool things because of the platform services module within Intact, the ability to create as many custom fields as we want, and report writing is very, very flexible as well. So really you have the best of both worlds in the cloud and SaaS type space.
And Taylor, when it comes to customization, are these really like in the code customizations, or is it all sort of at configuration? I know that there's a fine line between customization and configuration. But for instance, when a lot of us think about customization, we think, oh, okay, now I can't upgrade because I'll break something. And how do you address that?
So great news. So we have the ability to configure the system. So a configuration might be the way that a particular report's run, or we use open balance versus balance forward in collections. But we also have the ability, as Marcus said, to create a real-time customization. So I've got a customer screen, customer master file, and I want to add 4 fields to it, and I want to add drop-down boxes with the different choices for it. Oh, by the way, I want to require that that field be filled in before processing that screen. Well, those customizations exist outside of the core Intact system, and anytime we upgrade the system, and we guarantee this, by the way, they survive that upgrade so that they continue to work just like they did before we upgraded the system. We also have the ability to integrate with other third-party solutions, and there's literally 20s and 50s of them that we integrate with. We guarantee that those integrations won't break whenever we upgrade the system. And on top of it, we allow partners like Marcus and others to write complete applications, for instance, a fixed asset solution, in our platform tool, so it looks exactly like Intact. It's on the menus with it. It has the same look and feel, and of course it runs in our data center, so it has the same uptime and all. And those are, as well, are guaranteed that they'll never break with a upgrade. So you actually have the best of both worlds: configuration, customization, integration, and then the complete building of an application, for instance, like collections. I'm going to go write a collections module and then make that available to my customers. So it's really a powerful scenario.
Okay, great. Thank you very much for that. So at this point, we have a few minutes left, but we also have a little bit of housekeeping as we get to the end of our program today. So we're going to go ahead and jump into that. Now, I'll say that we do have a handful of questions that we didn't have time to answer. And Taylor and Marcus, maybe work with you to get those questions answered. Okay, so we'll work to get them answered, A, directly, and B, also hopefully on performative.com, so everyone can see, not just the person who asked those questions. Apologize, but we're just running out of time, and we want to get everyone out of here on time. So I'm going to go ahead and run through these last few items. Number one, you will be prompted to take a short survey that's coming up in just a minute or so here, 60 seconds. And if you'd like to be connected to either of today's speakers or the sponsor, our friends at Intact, just indicate that to click of a mouse, and we're more than happy to make those introductions. We will continue these conversations on performative.com, so feel free to join and see what the answers to these questions are, plus what your peers have to say on the community. If you have any questions about CPE credit, please contact Chris Brower. You can see her email address right there. She's very responsive, and we're happy to help out with any questions on that front. A quick shout out about Performative. It's an upcoming conference in the San Francisco Bay Area. Impact actually will be there if you want to take a look at, talk to their folks, take a look at their platform, etc. We've got amazing speakers, a whole bunch of CFOs, JDSU, the former CFO at Oracle, CFOs of Mozilla, and a whole bunch of other companies. So it's going to be wonderful. It's free, of course, like everything we do at Performative here. And it's coming up on March 20th in San Francisco. A great thanks to our friends at Intact for sponsoring today's event, allowing us to provide this at no cost to our attendees. Great information today. A special thanks to Taylor and Marcus. Really appreciate your time and insights. You guys have been doing this for a long time. It shows. And thanks for all the great information this morning, gentlemen.
You're welcome.
All right. Finally, we have a last polling question. I'm going to go ahead and pop that out right now. And we'll go ahead and give folks, as usual, 30 seconds to answer these. And after this polling question, we'll go ahead and jump into the last piece, which is the post-event survey, which will take just 1 minute. So I'm going to leave this out for another 15 seconds. And while we're waiting for that, I also want to thank everyone who gave us their time and attention by attending today. We know how busy all of our attendees are, and we greatly appreciate your joining us today. We hope to see you again in the future at another Performative event or online at performative.com. So with that, I'm going to go ahead and close down this third and final polling question. We're going to go ahead and say a final thanks to our friends at Intact, and we will bid you adieu. So in just a moment, you'll see that survey come up. Thanks, everyone. See you soon.